What's up, everybody? This is Jimmy with Trading Decoded. It is May 15th, 2024, 4:03 in the afternoon. Market is closed. Before we get started, do me a favor. Please like, share, and subscribe to the channel, guys. If you would help me do that, that would be awesome. For some reason, I have this bucket list thing of getting a play button one day. I'm trying to do it organically, do all the things the right way. If you find useful information in these videos and you're applying them to your trading, please help me out. Help me achieve one of my particular goals, all right? I'd appreciate it if you would. Now, the title of today's video is It's Complicated. And it's not for the reasons that you might think. It's complicated because of us as traders, right? Most of us in our day-to-day lives are feeling the pressure of having to either have multiple jobs or working longer hours to just make ends meet, cutting on your spending or, charging on your credit cards or whatever the case is. And when we feel that way as traders, like most of Americans are, we find it increasingly more difficult to understand and trade a bullish market. Okay. Now, Wall Street and Main Street are two completely different things. We know this, but it is very hard, right, to do something when we don't feel it ourselves, meaning exactly what I said. For example, if you're not hungry, you're going to have a more difficult time enticing yourself or being excited about the idea that it's time to eat dinner, right? Whereas when you're starving, you're hungry, you'll gladly go eat dinner. When you're full, you want nothing to do with dinner. All right? Trading is the same way. When we're not comfortable financially, or we realize that Main Street is completely garbage, whereas Wall Street is record-breaking all-time highs, it's hard to get on board trading what we see. Now, today was a great day. Great day for calls. One opportunity that we found to play puts was a great trade. But very quickly, puts came off the table. All right. So we're going to go ahead and launch a chart, and we're going to talk about the things that we saw, the things that we traded, and what we were looking for. So if you don't know, today was CPI numbers, right? Yesterday was PPI numbers. PPI came in way hotter than expected. Market still closed green. CPI came in cooler than expected. Market closed way green, okay? The CPI report pushed us right through all-time highs, making a new all-time high, and we never came back to even touch all-time highs again. We just stayed above it and kept going up. But I didn't start drawing my lines until after the report for that exact reason. Now, the problem with being at all-time highs is we have no proven levels of support and resistance to get our targets from. So I had to use a combination of pivot points, futures lines, to then calculate out the targets high and low, high specifically. Now, today's targets, if you look, are basically in 50-cent increments. Okay. It's eerie to see how well those levels actually worked. I was surprised by it. However, what we were talking about in pre-market was very simple. As we always do, we have a call put scenario. If you're looking for calls, we'll get in at a breach of 526.22, hoping for a move up to that solid level of resistance of that pre-market high line. Okay, so you get in here, you get out here. Some people hung on to the trade a little bit longer, waiting to see if the Qs were going to continue to push up. Whatever the case, this here from entry to exit got you anywhere from 15 to 25%, depending on when you got in and when you got out. Call scenario worked out great. Now, put scenario was down here. We wanted to wait for a candle close below that line, and then we would expect it to come down to 525.37. If you waited for the entry there, you got it. What I saw, and why a lot of other people bought puts before that, not because of a put bias. We were talking about the idea of this being a counter trend trade. The market is extremely green. The top 10 was green. Everything was pointed up. So what did I see that led me to believe I should give puts a try, even though it's a counter trend trade and we were looking for a very specific move. SPY's not doing it. SPY's coming off of a higher high. Qs are coming off of a lower high. When I see lower highs, I expect supports to fail, not hold. Now, you don't have to trade puts when you see this in an uptrending or a green market. What you should reconsider is buying calls. A lot of people want to buy calls off this support, which is fine. Don't buy calls off of a lower high. Sometimes it holds and continues up. Oftentimes, and more often, lower high typically puts additional pressure on support that tends to be less likely to hold. So it doesn't mean buy puts here unless you're intentionally looking for puts, but really pay attention and see if maybe you should hold off on calls because of this little guy right here. Now, for me, we were looking for calls or puts, okay? When the Qs put in the lower high, I told everybody, guys, Qs are putting in a lower high. I like puts because I believe that means support's going to fail. I got into this trade, as did several other people, at 9:43. So I got in a bit early. Qs not only got through that support, they closed below that support, which is why I stayed in the trade, expecting it to move down to the next support. Simple. If we're trending down, I believe when we close below support, we're likely to move down to the next support. I don't overcomplicate that. Jimmy, how will you know we were trending down? You don't know that we're trending down until we put in a higher or lower high and a lower low. Okay? But I'm being aggressive in that the lower high is the start of what may become a trend down. So I take the risk. I can afford to do it. I'm happy to do it. You don't have to do it, but I'm telling you why I do it. Okay? And at that time, was ADD moving down? Yeah. ADD was selling off. Okay? So even though I don't take a trade based on ADD, I will hold on to a trade despite Qs getting to a support level if ADD is still dropping like a rock. I'm looking for confluence. Does this move have any potential left in it? I'm trying to look to other things in the market to give me that confidence in doing it. Talk through that entire trade all the way down to this line of support on the Qs, which happened to line up with this line of support on SPY. That right there was a 53% win. I was done for the day. 2 trades, 22, 23, and 53. Our put scenario, waited for a candle close below it. Awesome. Okay, you got a 40-cent drop. Paid also. 2 trades done by 9:50 in the morning. Now, Jimmy, when would you take your next trade? When would you buy puts? So, well, with everything being as green as it is, and we found support down here, I'd want to break through levels of support before I'd be comfortable in puts again. We now have levels of support that we've built on the way up that we can't ignore because they didn't exist before. Okay? They didn't exist before. Plus, Qs bottomed out and started to move up. Qs coming off higher lows, that means no puts for me. If we're coming off of higher lows, no puts for me. Same thing as lower highs. I wouldn't buy calls. Higher lows, I wouldn't buy puts. You can watch it happen day in and day out, guys. It doesn't happen 100% of the time, but it happens often. Higher low. Higher low. Okay? Not buying calls or puts at this line. I would switch to calls and get into calls if we can clear this resistance right here, and Qs are able to clear their resistance as well. Okay? Qs can get above this right here, okay, which they did successfully at 1017. SPY just needed to clear its resistance. So Qs had already done it all the way back here. SPY needed to do it too. Entry, 2 calls at a candle close above that line. Where are we expecting it to go? Well, Where are the Qs going? Let's see if the Qs can make it to their next level of resistance. Guys, the market just kept trending up and up and up. It was a grind. It was slow. But man, every one of these lines here were us hitting lines of resistance on SPY or Qs. Every one of these were pullbacks to support on the Qs and SPY. Okay? So entry because we broke resistance during an uptrend. We're looking for the next resistance high. If you missed that, want to play less aggressive, you don't want to buy breakouts, okay? Wait for a pullback during an uptrend to support. Okay, let's see if the Qs were on support at 1055. Ironic, right here. Now let me get rid of this alert here. Okay, you guys see this right here? Many people don't look at it like this, but that is a level of support. It didn't exist before. We were moving up, we pulled back. So when you're moving in a direction, fail to move higher, even for a brief moment, try to pull back, can't get in the other direction, and we start to move up again. That is a new support. So you have support here, you have support here, which held. You got support here, you got support here, you had support here. And each one that broke, we moved down to the next support. Okay? You've got to watch this stuff. Now, what we aren't doing is trying to play puts. I was begging people again to not play puts in this market. Please don't buy puts. And then I break it down into the simplest form possible. And this is exactly what I say to my community members. Guys, if we're trending up, what should we be looking to play? What I'm doing is using a process of elimination to narrow your choices down so that you can make better decisions with fewer options. If we're trending up, we should be looking for calls. Great. There's two times to buy calls, in my opinion. Number one, at a close above a resistance level, granted there's additional room before you hit your next resistance. That's an aggressive entry. Or a pullback during that uptrend to a level of support, buy there and up you go. Okay? Simple. So we've eliminated the need for puts. That takes away 50% of your decision making. Now what's left? You know you're looking for calls. When are you going to feel comfortable buying them? Easy. Do you know how many people lost money in puts today? Not because I'm telling you to buy puts. Because you can't accept that the market is moving higher. I don't agree with it. But I'm also to trade. I'm capable of trading what I see. Not always, but most of the time. Okay, I made good money today in calls and puts. Tons of people made great money today playing with the market. All right, why you don't accept the market for what it is, there's a multitude of reasons for that. Okay, but if you can't trade around your personal feelings and go with what you're seeing, then it's better for you not to trade for the day. If you have a put bias, what I would recommend that you do is paper trade until we get into a downtrending day or a pullback, a decent pullback during an uptrending day, whatever the case is. Don't try and buy puts at every new high of day. Don't try and buy puts at every new line of resistance. It's often a costly thing to do. Okay? Play with the market, not against it. We can oftentimes find reasons to take counter trend trades, but it's not the smartest thing to do. It's stressful. You're going to want to get into them and out of them quickly. For example, some people were buying puts here. If you're going to counter trend trade, one of my personal rules is if you're going to counter trend trade, in this case, we're counter trading against the market going up. So we're looking for puts at resistance. Maybe Qs are at resistance also. I am suggesting that you get out of those puts at the very next level of support that we come down to from your entry point. In this case, right here. You see these guys? Support. Buy at resistance, sell at support. In an uptrend. Don't assume that you're going to be able to perfectly time the reversal of a trend. Take small bits of a counter trend trade. Okay? Is it possible it breaks the support and craters down? Absolutely. If you want to hold through that, all I'm suggesting is that the minute you come down or near a profit target, that you put a stop loss in at break even. That way, if you decide to hold on to it because you think it's going to crash down for whatever reason, you're protected from losing any money. If you're going to take the risk, protect your ass from the additional risk that you're willing to take. You can't make money in the stock market without taking risk. Every trade involves risk. But there's absolutely plenty of ways to mitigate and minimize the amount of risk that we're taking. But what we cannot do, ever, is ignore the fact that sometimes that risk comes in the form of a trade we want or get into not working. And the only way to protect the downside risk is with a stop loss. Now, if you are using mental stops, then you better not lack discipline. Because most mental stops that get through and you don't stop out end up becoming catastrophic losses or hold and hope trades. I've done it enough times. You've done it plenty of times. We've all done it. Every trader has done it. Okay? Emotions get in the way. That is what's making trading so complicated for you. It's not the technicals. You all know how to spot an uptrend. Higher highs, higher lows. Why is the default for so many people to buy puts during an uptrend? Because you don't agree with what you're seeing. That is dangerous to trade against. Sometimes it works. We have people who counter trend trade and scalp it and they make money. That's fine. I'm dealing with people who are trying to learn how to trade responsibly or have done so much damage trading the wrong way that they shouldn't be even considering counter trend trading yet. You've got a lot of bad habits to get rid of before you can move forward and start taking added risk. Okay? My job is to not teach you how to be overly risky. I'm trying to teach you how to find the probabilities to increase your odds of your trades working for you. I had a number of people today buy calls at the point we were getting out of the calls that we planned in advance. We were looking to buy. Some folks bought calls because we closed above our pre-market high line. Why? Guys, use this analogy. Ever since you were a kid, your parents taught you to do what before you crossed the street? Look both ways, right? Why? So you didn't get clobbered by a car, right? Your survivability increases if you look both ways. That's a fact. If you're going to cross the street and try and go from curb to curb, line to line, make sure there's no cars coming. What was our success rate of holding above this blue line prior to this candle? This is exactly what I told the people who bought calls on this candle. What was our success rate of holding above that line prior to this candle at 9:35? Just look over here. Look that way. You see it? You see this? 0% success. Doesn't mean this time can't be different, but why are we relying on what we want to happen versus what has proven to happen? Why does the evidence not overtake your desire? That's where people differ, right? Some people look at this and say, well, the market's very green. If we close above resistance, the market should go up. You may be right, you may be wrong. But I look at it and say, every time we tried to get above that line, we couldn't do it. So I would just assume, wait. I wouldn't buy this breakout. Now, in our call scenario, where did we know that price was likely to stop if we chose to take a position here? Again, just look left. 100% of the time, we stopped moving higher at that blue line. 100% of the time. So yeah, if you're going to take calls, go with the odds. Wouldn't you rather take a nice, comfortable trade, take your profits, and not worry about what happens next? I would, because I tried it the other way plenty of times, only to be rejected by that line and give up all the profits that I had, and oftentimes turn that trade into a hold and hope that ends up costing me a lot more money. Okay, and if you guys can hear my son singing in the background, I'm sorry. He's playing Beat Saber, and this is what he does. If you can't hear him, well, I just outed him. But trust the lines, guys. If we break support, we should move down to the next support. We have proven that to be the case. Okay, now in this case, we breached our put line. Where did it go the last time it breached that line? Down to that yellow line. Okay. Do we want it to go farther down? Yeah, if you're in puts, you do. But you have tools showing you that it may not. And that's fine. If you want to try and catch a bigger trade, all I'm asking you to do is once you get near your profit target, your planned profit target, simply move your stop loss to a place that you cannot lose money anymore by taking the additional risk of hoping that something happens that hasn't yet happened before today. That's all I'm asking. I don't know who would be upset with a 25% or a 50% trade, or a 20% or a 25% or a 15% trade that happened in a minute's time. Okay? I'm not looking for 100% winners, guys. I'm looking to follow what the chart has shown me to be likely to happen. I'm trying to teach you to do the same thing. So to buy calls here with a 0 success rate of staying above that line leading up to that time seems crazy to me. But at the same time, many people see it like this. Oh, look, we had 7 green candles in a row, 5 green candles in a row. I'm getting in late, but that's good momentum. It's going to keep going higher. Hopefully it does, and it might. But this over here doesn't give me the oogly googlies to jump into it. But for some people, it did. Some people, that happened because they were frustrated they didn't even get in when they were supposed to. Some people didn't feel comfortable buying calls here, then got frustrated to see that it did work and said, all right, well, I'll just catch what's left. What if there's nothing left, as proven at that time to be the case? You took a losing trade. If you held or bought the pullback here, fine. We had people buy the pullback, okay? Because Qs at the same time were pulling back to support. What's your profit target? Surely you've learned from the last time, right? You actually have a new line of resistance just above our blue one right here at the double top. That would have been your exit on that trade. But Jimmy, what if it goes higher? Well, then you only made 20%. Sorry. What if it doesn't and it does this instead? Would you have stopped out in profit? Would you have taken a big loss? Would you become a hold and hoper? Why doesn't anybody think about the what ifs like that? You say what if because you only see the side of the trade that would benefit you. It's my job to remind you of the side of the trade that you're completely forgetting about, because when you forget about the losing side of a trade, you will never protect yourself in the event that it doesn't work, i.e., a stop loss. Okay? That is my job. My job is not to tell you when to buy and sell your trades. Okay? My job is to teach you how to protect yourself, how to deploy your capital in a way that gives you better odds of winning. I'm not a call out service. These call put lines are something we do every single day, and they have a very high win rate. You don't have to trade them. They're aggressive, but they're always based on technicals. Always. If we breach this line, we're looking to make it to the next line. Your entry, my entry, is a breach of that line. Because I expect if that happens, it's going to do what it did the last time it breached that line. It went up to the next resistance. Right there. We came down from below it, up through it, and wicked up to here. Is this candle any different? No. What you choose to do when we get there is completely up to you. I will tell you, take your profits. If you don't want to get your profits, move your stops or put a stop in place. I don't know if it's going to continue up. I don't know if it's going to reject. I know that it did exactly what I hoped it would do, and that's good enough for me. If it ain't good enough for you, then you do you. Just protect yourself. Just protect yourself. Okay? Now, there wasn't a whole lot to talk about on here. We got into a time where the market really started to slow down. Then it started to break above resistances again, got above the yellow line, finally broke resistance here, and continued to crawl up. I mean, it was just a slow but yet more sideways move until the close, which 5:30, right there. So the key and the message of today was, once we broke this here, puts came off the table, never to be talked about again. Never to be talked about again. Don't counter trend trade. Trade with the trend. If you're struggling, you're tying together a bunch of red days, learn to stop doing what is creating those red days. Take a look at what is doing it. If you're constantly counter trend trading, when will you realize that it's not working for you? We want to blame everything else before we even consider the fact that maybe we as the trader are the problem. Oh, it's the indicators. Oh, it's the market makers. Oh, it's Jerome Powell. Oh, it's Jimmy. Oh, it's you. It's you. Recognize it. Have some accountability, because until you accept that you're the problem, you will never progress in the right direction. You'll never progress. You'll just point the finger. It's this person's problem, that person's problem, that mistake, this, that, while you lose your account, blaming everybody but yourself. And in the end, you're going to have tried every strategy, every indicator, every trading room, every video, still losing. And then you'll start to say, maybe I'm the problem. Journal, guys. Find out if your win rate starts to drop significantly after a certain time of day, or on certain days of the week, or on report days. Okay? Do you do better in uptrending or downtrending markets? Do you have a bias? You have to be brutally honest with yourself. Otherwise, you'll just keep running in circles, but usually falling backwards. Every successful trader that I know of stopped doing what they realized wasn't working. Because you might be able to take 2 steps forward, but if you keep doing the thing that's setting you 3 steps back, that's backwards progress. That's regression. So if you just do less of the 3-step back thing and more of the 2-step forward thing, all of a sudden we're moving in the right direction. Guys, this is not an easy business. I've never claimed it to be, and I will never tell you that it is. Most people will not succeed in day trading. Most will not. I stand to lose by telling people that you're probably not going to make it. But I'm also being honest with you. Most people don't get it, but it's not because you lack the ability to read technicals or understand how markets move. It's because you're not accepting the technicals and you're trading based on emotion. All right, so we're going to wrap it up. Hope you guys found some useful information in this video. If you did, once again, please like, share, and subscribe. If you'd like to join our Discord community, we have a link down below. We would love to have you. Spend the first week there completely free. See if you gain any information that you didn't know to look for, maybe you're not paying attention to. Hopefully, in that week, even if you don't become a paying member, I can teach you something that helps you lose less or maybe gives you a little bit more of an edge to take more successful trades, right? Because very often, learning which trades are worth skipping is debatably more important than finding which ones are worth taking, okay? And that's pretty much it. So I hope you all had a fantastic day today. Put bias people. Today was a rough day for you. Tomorrow, we got a bunch of reports and a bunch of Fed speakers. So I expect tomorrow to be another day full of fireworks. So we'll see how that goes. But until then, I love you guys. Thanks for watching. See ya.